Welcome back. OpenAI setting its sights on a blockbuster $500 billion valuation. $500 billion. Take that in. It's in talks with investors around a potential employee share sale. MacKenzie Sigalos digs into this for us in today's Tech Check. Mac.
Hey there, Morgan. So I spoke to a person close to deal talks, and we know that the secondary will be bigger than that $1.5 billion, the amount of equity involved in the last employee share buyback. Now, part of why we're seeing that floor rise is simply timing. So OpenAI has a 2-year hold rule. As more time passes, more employees are eligible to sell. Now, the other big factor here is investor demand. Now, even for OpenAI, this is moving very fast. Talks for the deal only started last Wednesday, which was right after the startup finalized allocations for the $8.3 billion primary round. Now, that round was 5x oversubscribed and left a lot of investors frustrated with how little they got. Now, normally, OpenAI waits months after announcing a raise to run a secondary sale, but this time they're moving much faster because of the overwhelming VC appetite. So the startup is effectively lining up new primary capital and an employee share sale in tandem, reflecting just how much investor demand there is to get in. Thrive Capital has been the most vocal about wanting this to happen and is currently the furthest along in talks to lead it. This shows SoftBank is also in a good place. That $40 billion raise announced in March raised a lot of eyebrows, especially with the valuation that was double from its last round. But now Masa is starting to look pretty wise given the demand and valuation that we're looking at now, Morgan.
Yeah, it's pretty nuts to me. Whether it's OpenAI or whether it's SpaceX, I'd probably put Stripe in this bucket, a number of others too. I mean, to me, one of the bigger stories here isn't whether OpenAI is going to go public anytime soon. It's how liquid these secondary markets have become. And when you do see things like tender offers and employee share sales and investors finding ways to get in, like there's not as much of a rush to go public because of these instruments.
No, there isn't. And that's why, the most that we've gotten from the company is CFO Sarah Fryer saying that an IPO would be considered if and when the company and market are ready. And really, the top thing on OpenAI's to-do list at the moment is this big restructure. And that's a key stipulation of the $40 billion fundraise. So currently, they've got that nonprofit parent entity, but they're going to turn themselves into a public benefit corporation, this PBC, where they're legally required, even though they're a for-profit structure, to serve both the public good as well as shareholder interests. And so even if they wanted to go public now, which when you have secondary markets that are this liquid, there's not as much of an appetite for it, that needs to happen first. And the other big thing on their plate is these deal talks with Microsoft. They're happening almost daily at this point. They're renegotiating certain terms, and it's two different conversations. They have that commercial contract with them, but there's also, the question of what that relationship looks like going forward, because it's been pretty cozy so far. I mean, what we know is not really up for debate is the 30 to 35% equity that Microsoft will have in this newly formed for-profit entity. But there are questions about, can OpenAI kind of expand out who it's able to work with in terms of cloud providers? And I'm sure Microsoft doesn't like hearing that because their Azure business is really just had a blockbuster quarter in large thanks to working with them. And then the other thing that OpenAI really wants to get more flexibility on is compute. And we've already started to see them diversify through Stargate with CoreWeave and Oracle.
Yeah. And of course, they want to hang on to their talent, right? So that's a piece of it, too, given what Meta and others are doing in the midst of this new AI talent war. MacKenzie Sigalos, thank you for breaking it all down.